Dividend stocks, should you or should you not have them as part of your investment portfolio? And if so, what in particularly should you be looking for? Which dividend stocks should you incorporate? Hi, my name is Lord Loyens. I am the founder of Black Bear Dog Trading. And if you've been watching my previous videos, then you know that I use Forex trading, and the profits I earn of Forex trading, I invest them elsewhere to create financial abundance in my life. So today I want to address dividend stocks. Should they be part of your portfolio? I absolutely think they should. They should be. Why? Well, regular index funds, regular stocks, regular ETFs pay you interest, and that's where it ends. Dividend stocks, dividend funds, dividend index, whether the index or ETF, on top of interest, also pay an additional interest known as a dividend, which is a portion of the profits that the company makes and shares with you for owning some of the shares in the company, being quote unquote a part owner of the company, or in case of an index fund or ETF, several companies. So, and if you reinvest not only the capital gains, but also the dividends that are being paid out back into the stock or the fund, then you partake in what's known as compound growth. It works the same as when you have interest paid on, for example, a high yield savings account, and you reinvest that back into your high yield savings account. That is known as compound interest. In stocks, it is known as compound growth. So yes, you want to add that back in to maximize the effect of growing your investment at a much rapid rate. So the question then arises, okay, if we need dividend funds as part of our overall investment portfolio, what should we look for? Well, I'm going to share with you an example of actual dividend stocks, and I'm going to walk it through with you what you need to pay attention to. This here is a Fidelity Index dividend fund, which is called the Dividend Growth Fund. Right now it is $39 per share, a little over. It is on the upswing. The dividend yield, when you look, is pretty darn good. That means you have an annual of $3.75 per share, and the dividend growth has been 226+%. They pay dividends every 3 months, and the last dividend was on December of 2024, which means that the next one will be in June, in June of this year. So when you look at this is pretty darn incredible. I mean, 9.54% dividend. Wow, if you own a lot of shares and you get $3.75 per share, you stand to make some hefty income on top of the interest that this particular fund pays. And when you look, scroll down, let me get rid of the markups, you see exactly what has been paid thus far. In this case right here, the payout was pretty darn good. So overall though, on average, it seems to be that we get about, 0.9, 0.1, 0.1, even last year, 0.3. So, but it's paid, and it's paid on a regular basis, as you can tell. So now let's look at another dividend fund. This dividend fund is iShares dividend fund. Now, the cost per share here is a lot higher. it's $134 plus per share, versus with Fidelity, it's only $39.81 per share. They too pay dividends. The iShare pays dividends, and just like the Fidelity dividend fund, it pays it every 3 months. And the last dividend payment was December 17th as well. Now, they pay a lot less. It's $3.56 per share versus, what do we have at Fidelity? 9.54. The annual dividend, however, is larger, $4.79 per share versus Fidelity being $3.75 per share. Their growth has been 7.11% versus 226% for Fidelity. So what do you do here? Now, if you scroll down to the payout, how is the iShare dividend fund ETF paying out? Well, they're paying a much higher rate. 1.3, 1.5, 0.9, 0.9, 1.1, 1.4, 0.8, 1.0. So which one of these two would you choose? Would you choose the 9.54 dividend yield that had experienced a growth of 226%? Or would you get at the dividend ETF that pays you 3.56 per year with an annual dividend of 4.79, and that has seen 7.11% growth? Well, it's actually very clear which one you should pick. You shouldn't pick the high paying one, and you shouldn't pick the one either that has a massive growth, because when you look at the payout fluctuates dramatically. Here we went from $2 per share to 10 cents, 90 cents, 10 cents, 6 pennies. I mean, the fluctuation is, while you look at the ETF dividend fund with a much lower dividend yield, yet a higher payout, the payout has been much more steady. $1.3, $1.5, 90 cents, 99 cents, $1.10, $1.4. So what I'm trying to show you here is, don't just jump on the dividend with the highest dividend yield. Just because it has a much higher yield doesn't mean that it's a really good dividend to have in your portfolio. Do a little bit of research and compare the two side by side, like I'm showing you here. I use a free website called Stock Analysis, and it gives you all the information you want to know about dividend funds, dividend stocks, dividend ETFs, and you can go and also get a general overview. For example, here it shows you, what the projected profit ratio will be. Right now, what they're paying, what their yield is, when the last time was paid. So you can see what kind of companies make up this particular ETF. And as you can tell, it's Altria, I don't know who that is, AT&T, Philip Morris, Citizen Financing, it's a little bit of everything. Here's technology as well, communication. We have pharmaceuticals, we got financing, we got electronics. So this is made up of a little bit of everything. The shares are higher, and so you make more, you get paid more because the shares are higher. Here the shares are lower, but even though the dividend yield is higher, you still make less, and it's a lot more fluctuating than the other ETF. So let's look at who we have in this here. And the reason for it is immediately obvious. They have Alphabet, Google, Nvidia, Microsoft, Meta, Broadcom, technology, basically technology. And then you have a little bit of financing in here. Here's Taiwan Semiconductors again, technology. See, while they claim, if you look to the site, that they are predominantly in information technology, then healthcare, then consumer stable, if you look at the other one, the holding, well, because it's an ETF, they don't show you what they are made up of predominantly, but you get an idea when you scroll through the holding, the companies that are part that make up this ETF, that they have a good balance of a little bit of everything. So in my case, I of course have this dividend, DVY. I have this ETF as my dividend or income generating investment fund, DVY. And yeah, the shares are a little higher, but they are more consistent. They pay out much better premiums, and combined with the interest rate that I'm earning on this, I do better with this dividend fund than I do with Fidelity's own dividend fund. So, should you have dividend funds as part of your overall portfolio? Absolutely yes. Which one you choose can make a difference on your growth, and now you know what you should be looking for. And stockanalysis.com, a free tool. I have no affiliation with them whatsoever, but I like their website. They give you quite a bit of information, very easy to maneuver. Anything you want to have here, you see this one is going up slightly, went down a bit, going up, tells you the 10, you see again, electronics, technology are the 10 largest companies in there. So you can get to read a little bit about the whole thing, even the history if you want to. So you see where they were in the dip, they have gradually kind of stayed. Now they're going up a little bit. If you were to do the same for the ETF or DVY, then you get basically the same layout. And as you can see, they too were a bit low. They were really low some time ago, back in 2000. They were really low not that long ago, and on the 5th, and which is actually today, early morning. And then they went up, and they gradually up, and now they're staying where they are. And yeah, so then you also have some news pertaining to those this particular ETF or index fund or individual dividend stock. And you see it here, it's a large value. The ETF provider is BlackRock, which is one of the largest, if not the largest, hedge fund companies, investment firms in the United States, perhaps even the world. So the 10 holdings here are, I don't know, Altria. Let's look that up. What is Altria? Let's see what we get here. Beyond smoking, Altria is a leading tobacco company. So there you go. So that's, but you see the portions are much more equally divided. They own like 3.14, they make up 3.14% of this ETF. AT&T 2.34, Philip Morris 2.09, International Paper 2.08. They are more evenly divided. If you go to Fidelity's FDGFX and you click on this one, then you see the chunks are larger. Alphabet owns 7.06, Nvidia owns 6.83, and then they start to drip. They start to downgrade or less percentages pretty rapidly. So that's what you should be looking for when you want to add a dividend stock. index fund or ETF to your overall portfolio investment. I hope this was helpful for you, and I'll see you in the next video. And as always, take care and God bless.